At Emkay PMS, our investment philosophy is to create wealth in Indian equities for investors worldwide. We want to do this in a very transparent way. We strongly believe in highest level of integrity and transparency. Our philosophy is to do long-term investing for about 3 to 5 years for all our investors. It is very important for us that we actually create wealth over this period for all our investors. We want to do this by doing conventional and smart investment strategies, applying the entire knowledge research base that we have, and this is going to be some of the very important guiding principles for us. The guiding principle at Emkay PMS is absolute returns, and to achieve this absolute return, one of the most important thing is purchase price discipline. We are extremely disciplined about this purchase price discipline. We are not ever in a hurry to invest. When it comes to investing, everybody talks about patient investing, but patience is not only after getting invested. I think you need to be very patient even when you have to invest money. As Warren Buffett says, that when you're doing fishing, you got to be waiting at the river bank till you see a large fish coming, and it's very easy to get it under your net. But when it comes to investing here, a lot of investors are not only in a hurry to invest, but they're also in a hurry to exit, which is what creates a very mediocre kind of returns. We have seen over a longer period of time that when you invest with a lot of purchase price discipline, it really delivers exceedingly good results, because there are typically 3 things that you need when it comes to investing. One is getting a good business which can make a lot of money. Second is getting a decent manager for it, and third, getting the right purchase price. The third is the most important and a critical part, if you are because it requires an art and science both, and which is what we get onto the table. At Emkay PMS, we have a very strong research process. For everything that we do, we follow a lot of discipline. We have a proprietary module called E-Qual Risk, Emkay Qualitative Risk Analysis. This is a very unique thing that we have actually created. When we talk about management quality, a lot of things are very subjective. We have tried to get this subjectivity out and created a module where we very objectively calculate a lot of data points and publicly available data points for all the companies, so it's very easy to compare across the companies to do this qualitative analysis of management integrity, management capability, distribution of wealth to minority shareholders, knowledge and information to the shareholders, and also the liquidity in each of the stocks. I think some of these parameters are very important and critical. We follow a lot of data and parameters for each of these modules so that we get the right understanding of the management quality. There are some other processes also that we follow. For example, we would look at a lot of track record of various companies. One of the very important things that we focus is on cash flow statements, balance sheets and P&L, and of course the common size statements to understand the business model. Some of these things are a bare minimum for us to look at a good company, and ROC and ROE are a very strong guiding principle for us to look at where these businesses are actually going. We have a very strong research process that we follow. As I just mentioned, that when it comes to investing, one of the very important things is to look at management quality, and we are very disciplined about this. We have a very strong internal proprietary module that we have developed called E-Qual Risk, which is Emkay Qualitative Risk. Under this process, we try to evaluate managements across the companies, and we try to understand what is the management integrity, management capability of each of these managements by analyzing various data points. Some of the data points are very simple and they are all publicly available. Like for example, what is the promoter shareholding? How has the promoter shareholding been increased or decreased in the last few years? Is the promoter shareholding pledged or unpledged? Who are the auditors? What is the royalty that the company pays to the parent companies in case of multinational companies? On these various parameters, we would give different weightages, and accordingly our E-Qual Risk module actually gives us a score which allows us to do a good risk reward for each of the investments that we are evaluating. This is a very strong process that we actually follow. We also have some of the other processes that we are following. Like for example, for us, when we evaluate balance sheets, cash flow statement is very important and critical. Cash flow from operations is something what we are always glued on to. Companies which do not generate enough cash flow from their routine operations is something what we are not very happy about. We are also very focused on the balance sheet, because we strongly believe that every business goes through a bad and a good cycle of last 10 years, and in this 10 years how have they performed, particularly in their bad cycles, gets reflected in the today's balance sheet, and that actually tells us how strong and how well it was managed by the management. So these are some of the very important and critical parameters. Of course, one very important thing is to evaluate the business model, and for that, largely speaking, common size statements is also very important for understanding some of these business models. In the next part, we will talk more in detail about our E-Qual Risk module, where we will also illustrate some of the examples, how it has helped us in delivering and giving us good ideas and giving us a very good risk reward matrix.